Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500. I'm being recorded on Sunday, March the 17th. I am going to start on the cash market, the SPX, and it has been a difficult count, but I've made some adjustments, and so let's dive in and take a look. Starting here on the daily chart, I continue to count what I feel is a primary B wave, which began on October of 2022, or it began in October of 2022. And that primary B wave will consist of three waves of intermediate degree, which will be labeled A, B, and C. And so we're in that C wave on an intermediate degree, and it will consist of five waves of minor degree, of which we have finished minor 1, 2, 3, and 4. And so we're within minor wave 5, which will consist of five waves of minute degree, of which we have completed 1, 2, 3, and 4. So we're within that minute fifth wave, which will consist of five waves of minuet degree, of which we have 1, 2, and 3, excuse me, and possibly wave 4 completing. So we continue to really hone in or zone in on what I will consider the top of the primary B wave. That should lead to a fairly strong initial decline, and actually the whole decline should be a little bit on the strong side, but initially we should get a lot of rejection from wherever this tops out. We'll start to see rejection, and there will be a lot of emphasis on whatever is going to come out that's going to trigger that. So I still believe that it will be a trigger outside of just the fact that the market reached a high, it reached a level that is not going to be sustained by a lot of the underlying facts. So there's a lot going on, and there's a lot that can be included in what will trigger this turn for the market to begin to correct the counter trend rally. So in other words, we're going to be looking for a primary C wave down, and that will then complete, in my view, in my count, a cycle fourth wave. Now that cycle fourth wave, once it's complete, would yield to, which basically will end up being a cycle fifth wave, but it will come in as a renewed economic expansion. So whatever we need to get through, interest rate wise, inflation wise, whatever is kind of holding this market back right now will be relieved. Inflation may be defeated. So in other words, they get it in line. The government begins to function more on an even basis, or whatever the situation is going to happen, that it will happen, and it will provide the catalyst for the economy to sprout and grow strongly again. And it again likely is going to be led by artificial intelligence, or there will be additional factors that'll come in to that. So once again, let's dive in. So we're within this completing intermediate C wave, which will complete the C wave and the B wave. So let's get inside all of this. I'm going to come down to my 4-hour chart, and we're going to take a look again, cash market. So we have the B wave, 1, 2, 3, 4 on a minor degree. So we're in that minor fifth. So let's just open this up, see what we can come up with. So we have minute 1, 2, 3, and 4. And we're inside this minute fifth wave, which in my estimation is ending in a diagonal. So what I need to kind of put in here, at least on the cash market, as well as likely on that futures market, is our trend lines. So we have that one there. And wave two comes in equally right there, but I'm going to put it right here. So to kind of equal one another. And I am going to stick, nope, it's not that. It's going to be a trend line. And I'm going to stick it up on the basis of where I'm believing that this wave 4 should finish. And I will put in some additional, but we're going to give it to right there for right now. So we have an additional layer. So again, what I have going on here is, well, I'm going to take this one out for a moment so that I can see what I got here. Oh, it's just actually, we just put our trend line up, and then I will be adding the fibs for a fourth wave. Excuse me. So within it, same deal as I discussed in the NASDAQ, if you've already listened to that. In the S&P, in a diagonal triangle, they're going to waves 1, 3, and 5, yet to come on the 5, will form zigzags. So zigzag, then we get 3, and then we get a zigzag for wave 3, and then we get a larger ABC down for wave 4. Now, we haven't come down below 5,090, I'm going to call it. So we may already have completed this fourth wave, and we've actually got the A and the B done of minuet wave C, or the A and the B for minuet wave 5 to complete. So there's a lot really kind of going on that could really be determining. Now, right off the bat, I can go down here, and we have for minute wave 5, we have, as it compares to minute wave 1, equality. So in other words, and notice it's 2.618. So minute wave 5 would be 2.618 times the length of minute wave 1 at 52.19 or 52.20. And actually comes in just above that, excuse me, 52.25. We have the intermediate C wave would be 100% of intermediate A wave at 52.20. So that actually is now sizing up to be the level that we're building a little bit of a resistance cluster there. Now, if it kind of does it here, we're kind of be right below that trend line. So we can get up to the trend line so we can exceed it a little bit, but come back, maybe come back down to it or complete it just above. Now, if I'm going to leave this as a wave 4, then I will put in some fibs. In fact, I'm just going to come down to the 4-hour chart. Excuse me, the 1-hour chart. And so we can kind of take a look inside. See, this actually can be an ABC. And I maybe would leave it as an ABC A, ABC B, and then we kind of get 1, 2, 3, 4, 5. So it could be complete. It could be complete. And let me just kind of show you here, because I know I did this over in the futures market, and everything kind of lined up at the completion level. Now, if I put this down to here and I bring it up to here, either one, we'll put it there. Well, you can see the 100% is actually a little bit lower at 5,081. And again, this is where it starts to get tricky. So it's not breaking below the wave 2, which is at 5,055, 57. So that works. It's not breaking below the B wave of wave 3, which is at 56. So it's tight. The cash market's been difficult. But if indeed it holds here, there's two things. Either it's going to be, this is wave 4, and I'm going to connect this to here to get our finishing levels, or we're going to still finish it up a little bit lower, but right here at the 200, hourly 200 EMA, and that's going to be at 5,082 or 5,080, or here at the trend line, which is going to be 5,098, 95, 98, up in there. And that's still going to keep us above levels that I definitely want the market to hold. So Trend line's my first choice. Now, even if I'm going to be coming in, that's actually the way I would do that. But there was a one on the cash that I would have to put the 3 over here, but it didn't fit, so I leave the 3 here. So it's been a difficult count. I will grant you that. So as best as I can say right now, I have 1, 2, 3, 4, and then a 5. Now, within this, let's take a look at what this will look like. If I had to put it here, I'm actually going to come out to that level. And that level actually is coming in at a 90, so and that would be right here. I'm just going to leave it here. We're just going to use this as our marker. And 618 is 5,198 or 5,200. 100% is 5,261, so you can see how it really jumps, and that's the equality. But we have our trend line in right in the way, and we also have two other small cluster right here. So if we go from here and we had to come up, we have a cluster going from 50 to 20, 25, basically up to 35, maybe a little higher. So you question whether it actually could reach. It could on a push, but it goes above a lot of other areas. So again, 5,200 is showing up pretty cleanly. So again, what do we look for in this measurement, in this fib measurement for wave 5 as compared to wave 1? First is equality. Second is 1.618. Third is 0.618. And what becomes, again, most important is going to be the structure. So the structure could be, again, zigzag up. It should break at least to here. So here would put a new high above 3 and set us up for 5,200, which is really where this whole cluster is building. So basis the cash, I'm looking for maybe completions up here or in the 5,200 area. So let's see how that all works. Now, what goes against that right now? Same as it did over in the NASDAQ. We're seeing the moving averages start to swing. And at least on the hourly chart, where the 20 broke below the 50. The 50 is starting to turn and head lower. The 4 and the 8 are going flat because of the way the market finished up. But even the 200 now is going very flat. So if these continue to decay, and we start to see the 20 and the 4 and the 8 coming down and breaking below the 200, it could force a different scenario where this is all done. That this would be all done. And I'd have to likely put the 3 down to here. The 4 would come in here, would very not pretty, and this would be the 5, and that would be it. And what we're doing is 1, 2, and we're going to be working on a sharp. Now, so what actually would you kind of look for if that's going to be the case? I'd be looking for this market tomorrow morning when the market opens. It's going to just move sharply lower. In fact, it could gap lower. So I would suspect that the downside would begin in Globex and accelerate within either the Asian market openings and session or the European markets. And if that's the case, and we start to gap below all of this on the opening, it's going to lead very heavily towards this whole primary B wave being done, and we're moving into the next cycle, which is the primary C wave. Now, again, similar cycles here for the S&P as in the NASDAQ. So it still kind of does suggest that we're going to come into a cycle low, a trough, it was between last week and this week. And we could start the week by hitting that trough. The cycle turns higher, and then again crests by the end of March and starts to go lower which could drive the market lower into April, end of April, May. That's kind of how the cycle is pointing itself, and what it suggests is a probable path for the market according to us on a cycle basis. So this is the cash market. Let's go over and look at the futures market, which in and of itself, folks, it's like I said over in the NASDAQ, it truly has presented its challenges. Now, it is very fitting that again, A, B, and let me just go out, put my marker for that C wave. Go out here and go from here to here and back down to here. And go right there. So you can see the cash market, I think, is not going to fit that one. So if I go here, I'm going to leave that 100 there, though, for right now. And we're going to edit out this one. That one's already been well exceeded, as really has the 100%. But we're back down below. So 100% is at 52.51. So I'm back down off that daily. Let me go to my 4-hour chart, and we can look at how this is developing. So again, I think we've been above it. We're going to take a look closer. So, excuse me. So here we have, this one gets stuck down there. I'm going to bring it up here. 1, 2, see. I think we just get stuff moved around. 3, 4. So we're within the minor fifth wave up. And I believe that the triangle, as we saw in the cash, is coming up in that minute fifth. So here we have, actually, I'm going to take these. I could also claim it here. A, B, C. But I'm not. It's going to be 1, 2, 3, 4, 5. I'm going to leave that alone. Let me just remove these. I had them, and then I forgot to take them off. Always you choose the wrong one. I'll put the 3 back up there. Let me do it twice. There. Let me move this 3 out of the way and get rid of that C. There we go. So essentially, 1, 2, 3, 4, and it's within that fifth, the minute fifth wave that we're getting the diagonal. So let's kind of start to break this down and come within on the 4-hour chart to take a look. So we get the 5. I know it's kind of ugly, but I'm going to count that as 5, 3, and then we get another 1, 2. It's not pretty, but I got a 5. Could be a zigzag, in which case then I'm going to move that triangle pattern, but it doesn't necessarily fit as cleanly. So here's the 4. So what are our projections? 0.2618, same as in the cash. That's what comes up next. And that's 53.78. So I had nothing else coming up that high. So in essence, it now comes down to structure. So here we are within, and you're going to see here where the fourth wave could be complete at Friday's lows. Not as clear in that cash market as it is here. So now, cutting in there, let's bring it down to the hourly chart, which now we can look inside all of this. So here we have 1, 2, A, B, C here. And it does fit best that way. Otherwise, if I'm putting the 3 here, and this is an ABC for 4, it's just way too big, and just does not fit. But I can put an A, B, C together for wave 3. Now, you questioned as to, well, small failure, sure. It's in a triangle. They're not highly unusual, and it was pretty small. And even when I bring it down to here, you can see it's even smaller. It's even smaller. It's like a point. So I'm allowing it for the sake of how this is all working out. And then so out of that, I could bring that up just a tad. Yeah, I will. This is going to be 50, 52, 53, 50. Let me just put that in. It's going to change it just ever so slightly. What? Get rid of that. Let me go try that again. 52, so I'm going to come into here. Wrong one. Because it's this one. Never mind. So I got to go here and edit this one. 52, 53. Got it. 52, 53, 25. Yeah, you can see sometimes it gets a little complicated. All right, so it gives us a little bit more room here to the downside. If indeed this is an A, a B, and we got a little bit more, like this is only a 4. We had a 1, 2, 3, 4, 5. I think it already did the 5 down. And then this is the start of the rally phase, which should take us higher. But I need to adjust this trend line and bring it down to here. And so you can see it is an expanding. And again, volatility, zigzags, all kind of fit, completing. So it's not real pretty, but it's the increase in volatility that really kind of keeps it and keeps me in line with that. That's what I think is happening. So if we go based on that, and let's say the 4 is complete, then what I'm going to do is I want it to go right there, folks. Thank you. And I'm going to go up to the top of wave 1 and come over here to the bottom of wave, what I would think could be wave 4. Now, 618, 5285. 100% is 53. So now we're back out to here on the minute level at 53.78. That would be a pretty strong rally. And is it impossible? No, not at all. It could very well happen. So let's just keep it in mind, because we have that. This is primary B on the irregular at 53.07. We have the trend line also coming in right there. We have 618 for minuet wave 5 of minute wave 5 at 52.85. We have 100% for, I believe it's going to be the C wave at 52.51, which could work. We're looking for it to get above it, but it resistance and then additional resistance. And so it all starts to, it's spaced out a little bit, but it all starts to build. It is a pretty large zone, but I tend to kind of narrow it down a little bit and put it right into here. And whether it actually has enough oomph to really push from current levels up over 100, it could. But again, I'm looking for it. I would be looking for it next week. Otherwise, we're looking for it. It could be a different type of a picture. So I don't want to rush it, but we shall see. Market-wise, moving average-wise, you can see how they are starting to break down. Where's my 200 has been broken. The 4 and the 8 on the hourly have broken below. The 20 has broken below the 200. So we are now beginning to line up. If the 50 comes down and breaks the 200, it could shift this picture. Remember, put the 3 over there, and we could be all done. I mean, it could redo itself, but the 1 could go there, A, B, C. Yeah, it could be 3, 4, 5. It could be, and that would finish it there. We have failed to get above that high, and if we do, then of course, then we'll know the wave pattern. But if this thing starts to break down, then the 3 would be over there. So these are the alternates. Not necessarily what I'm looking for, but hey, market's going to tell us. So if the market continues to drop with some push, with some strength, then we're looking for something totally different, and there's a possibility that it's all done. But for right now, I'm going to leave it that we have a little bit more possible to do in this small 4, and then we start to rally again in that final 5th wave, and it should pick up some steam, and it should move briskly back above 5,200. Okay, this is where I am going to leave this for right now. Let me just take a quick look to include. Now, of course, what we do have coming out next week, which are going to be, important, is we have the Fed. Now, starting on Monday, home builder confidence. Tuesday's housing starts and building permits. So the big day, all eyes are on Wednesday. All eyes are on Wednesday. And that's the FOMC. That's where we're looking for, the Fed to come out. Now, initially, I have to tell you, I don't think there's many that are really thinking that the Fed's going to do anything. So I think the bias or the majority are basically feeling that the Fed will leave interest rates unchanged again. So that means 5.25, 5.5. That's the range, and it seems to continue to trade in that level. Now, anything outside of that undoubtedly is going to get a very strong reaction, including Chairman Powell's press conference. If he starts to wander away from the narrative that he's been presenting over the last 3 meetings, it could get a very negative reaction. So the big day is Wednesday. All right. I'm going to finish it right there. The next Elliott Wave update will be on Monday, March the 18th.